Good evening. How is everyone tonight? Sound is good? All right, tell you what, get used to typing on the screen. I'm going to make you guys participate tonight because tonight's topic is chart lessons. This is not Paul Talks, so this is going to require some interaction. And it's not interaction to try to either let anybody show off or belittle anyone. It's to get you to think about the questions, because if you don't think about the questions, the answers do not mean as much to you. So let's run through what we're going to do here tonight. Sound is perfect. I love it. His hair was perfect. Chart lessons. I have old songs on the brain tonight. Free event for members, Wednesday, May 8th. Got the date right and the time right and everything. Here is the topic for tonight. You saw it in the email, so you should already know the topics. That way, if you don't like these, you didn't have to show up tonight. And there's an infinite number of things we could go over. The goal is to take some topics and kind of zoom in on them and show you, it's a good start, and show you kind of, in depth in some of these a little bit, at least scratching the surface a little bit of what I think you need to be, the difference between just kind of saying I know technical analysis and I can make money using technical analysis. Because for a lot of people there's a big difference there. There's a line that gets drawn. So chart lessons, whether you're trading long or short term, it does not matter. I like both extremes. I like long-term trading, what you might call investing, and I like day trading. As you know, I'm not a fan of swing trading because I think it's a very difficult time frame for a lot of perspectives. There's a video on the site about that if you want to hear the reasoning why. Number one, never be long if the market is red. Let's talk about that. Never be long if the market is red. Do you know what that means? I mean, it's a very common rule I hear quoted all the time. In other words, if the market is green on the day, it's 10. Yeah, I mean, this is well, it applies to long-term positioning as well too. In other words, you wouldn't want to be, generally speaking, you don't want to be going short if the market's in an uptrend. But this is specifically as a day trading thing. This first one here, it's 10 o'clock. The market is down on the day, meaning if you listen to CNBC, they'd be saying market down today, Dow down 30 points. So the market is red. It opened and it is under yesterday's closing price. There's a very firm rule a lot of people have that says can't go long. Let's talk about that. Give me some comments on that. Here's where you guys have to participate. I've built in some time for your waiting for comments. What do you think about that? Good rule? Bad rule? Great rule? We're going to get to a slide on it, but I want to get you thinking about it before we even get there. Never be long if the market is red. Kind of synonymous. I mean, some people interpret it as don't fight the trend, but this is specifically saying, you look at your little screen, says Dow down, red, QQQ, red, SPY, red. It's 10 o'clock. You look around, you say, okay, got to be short today. Makes sense? Never say never. Well, that's kind of a pretty good thing, I think. Never say never. But as a rule, we interpret rules as being never. I know we may break them sometimes intentionally, sometimes not. But rules are kind of things that mean to say you never break your rule. At least that's what you would say. Okay, we're gonna take a look at that and decide if it's a pretty good rule, a real good rule. Where do I get some of these topics from? Well, where I get them from very simply is just from you guys. I mean, maybe not you specifically, but I will get emails all the time, or somebody want to talk to me, they're having problems, and these are very, 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 to me, common things that I hear people say. And even somebody comes to the DTS trading room, a newer person, and some comments will be along these lines, why are you going long, the market's red? Or, a common one I'll get a lot of time is, why are you going long because the stock's in a downtrend and they're not understanding what time frame I'm playing, right? Is that why the market sold off this afternoon? Did he have something to say? I didn't know. I was just sitting. I was short everything in the world, so I didn't care. It was fine with me. But sector could be bullish. Okay. Yeah, well, those are good points. We're going to talk about two aspects of this rule. But even when we get down to, let's forget about, one of the topics will be, of course, do you care about the market? One of the topics is going to be, do we even care? Are you playing a sector? Are you playing a sector that doesn't respond to the market? Are you playing a gap? But even if we've got all that, what if you're just playing the market itself to eliminate all that? Can you go long the market if it's red on the day? Maybe that's the better question, to eliminate half of the issues. And maybe you have a comment on that real quick. If the market, you're going to play the market, you're going to go long the QQQ or the futures, the market's red on the day. Could you go long? Is it not a good idea Is it completely impossible? Is it a good rule to have in your back pocket, and maybe you find reason to violate it? Yeah, Glenn's been killing it there. Glenn sent me a couple of emails there. He's been killing it on some of his future trading. Nice job. So keep in mind too, there's a variety of people here attending today, and there are some people that are going to, depending on which thing it is, you may have heard me go over some of this before. Maybe you've already learned it through your own experience or somewhere else. And some of you may go, oh, okay, yeah, I knew that. That's not a big deal. And some of you are going to go, wow, like by the way, if you get any light bulb moments, let me know. Some of you are going to go, wow, light bulb moment, great thing. And again, the reason I bring these up is these are very, very common things that I hear from people. You cannot go long if the market's red. Prior lows are key support areas. Now I know these are words on a screen, but again, any commentary is what I'm trying to provoke from you. Prior lows are key support areas. Is that a good rule? Is that a good thing? Is that a good general rule to follow? Kind of like look to the left. If there's a prior low pivot, a prior reversal there, then you're in some kind of support area. Is that a good thing to try to remember? Good rule. Depends on time frame. Maybe if lower time frames. Let me go on to the next one, and again, we'll get to these. Minor support failure areas are great shorts. Now, this one starts to get a little more complicated because some of you, we may not even all agree what minor support is. And again, I'm not big on names per se. I mean, I have to use names so I can describe certain situations and chart patterns, and I give names to certain things. And maybe everybody doesn't agree on the name, but when we get to the picture, the key I want to get to, if you have a minor support area, and minor support, it's something like this. You get to a minor support area, and let's say maybe this bigger picture is in a downtrend, so you're looking to be short. And the minor support area, you bounce and then it fails. Is that a good short? In other words, failing to hold minor support, is that a good short area? Is that, in other words, you try to bounce, it fails, you start going lower. Is that a good entry point strategy? Is that a good strategic thing to look for the failure of minor support to be short or the failure of minor resistance to be long? What do you guys think? And again, this one, you may have to wait to see the chart if it's getting a little confusing, because this is a little more upper echelon type question here. But on this one, I'm not going to let you get away with bigger time frame. I'm already saying, that let's say the bigger time frame you have a bearish bias even if you have a bearish bias. But the time frame we're on, minor support tries to bounce, and then that pivot breaks. It fails. So you bounce, and then boom. Is that a good short opportunity? In other words, I guess the question could also be worded, does minor support break? Can minor support fail? Why don't you think about it? Let's go through them all. Let's begin. Never be long if the market is red. Let me show you the first concept here that I wanted to get to. Now naturally, your similar concepts only play with the trend, go with the institutional flow. Those are good things. But specifically if the market is red, I want to show you, naturally, the first conversation can be, well, there's lots of instances where maybe we don't care about the market, right? There's a lot of instances that we just don't care. But even if we ignore those, there's still this concept is still a nearly worthless concept all by itself. It is a saying. It's a nice little colloquial thing to say, but there really is no meaning to it. And this is kind of what I'm going to get to tonight with some of these things, is that trying to shortcut with just general sayings like this, or just big concepts that don't really have the teeth to them, are where people get in a lot of trouble. To me, there is no validity to this concept at all, just in a vacuum, to say that that's why it's a nearly worthless comment. Sure, the thought is nice. I mean, if your general thought is you want to play with the trend, if that's what you want to do, that can make sense. In theory, it's true, but theory does not make you money. Rookie comment says follow the trend. Pro comment said use the trend as a guide on strategies that demand it, and look for the sweet spot with market timing and confirmation entry. Again, this is the difference between just having a vague concept of how to follow technical analysis and how to try to use it to make money. The words there that demand it, that's the first part of it, is a lot of your strategies may not require it. If you're playing gaps, if you're playing a different time frame, that's not a fair question, because we're talking about the time frame that you care about, but you could be playing gaps where you don't care. You could be playing a certain sector that's revolving around the sector. You could be playing a sector that has nothing to do with the market. If you're playing gold, We don't really care if the market's up or down for the day at all. If you're playing oil most of the time, we don't care. But let's say even forget that. Like I said when I was going through this on the very first slide when we were looking at the topics, let's just say the market itself. The market itself. Can you short the market if the market's green on the day? Can you go long the market if the market's red on the day? Well, let me show you just exactly how silly of a comment this is. And I am saying silly. I mean, when I hear somebody say you can't go long because the market's red, you know, I just have to chuckle. It's just a ridiculously poor comment. It means somebody that really has very little in the way of technical skill at all. Bullish or bearish? This green line here, 60-minute chart. It's a real simple question for you. Bullish or bearish? It's not a trick question. I just want to have a sip of my beverage here while I'm talking. Bullish or bearish? The green line. It's not candlestick, it's just a green line. B doesn't work, guys. You got to put 2 letters at least. BU, bull. Look at all those guys that said bearish. They just put B. Bullish, right? And if you followed, now we're just talking about this one time frame. There's no, because all we're talking about is this time frame right here. That's all we're talking about. This is perfect. And when you take this, and let's say this is your hourly chart, and if we were to now to superimpose the day breaks onto this chart and say that here's, you know, the day breaks. In other words, the market opened here, here, and here, right? So we're running along, we come into close, boom, we close, and then the hourly uptrend continues. Well, that makes your rule perfect, doesn't it? Everybody agree and see what I'm saying? Agree, yes, 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 yes. That the market goes green the minute the market opens, it stays green, and long plays are the way to be all day long. This day, day number 2, the market opens, it's red almost immediately, it stays red, and shorting is the way to be all day long. Does everybody see and agree that that rule I just said is absolutely perfect, correct? If the market's green in the morning, stay bullish, right? Correct, okay. You don't see that? If the market opens here, 2 minutes into the day, 5 minutes, 30 minutes, whatever time you look, the market is green, we're up on the day. And if you follow the rule of only be bullish or only play the market bullishly, right, we would be bullish. And it would work great. And we'd all be millionaires. But let me do this. Let me keep this green hourly chart exactly the same. In other words, not a single buyer or seller is going to change. Nothing is going to change in the world. Just one thing is going to change. When the market closed. See what I did there? Did I have to redo that? So now the market closes and opens here, and here, and here. Now how does our rule look? Our rule says, well, we open, we're red on the day. We're red the first 30 minutes. I got to start shorting the market because we're red. And yet you'd get killed. It's day number 2, we open, we're green. Got to be long the market. But you get killed. Did you see that simple little thing? I mean, where we kind of arbitrarily draw candles, and this, it really applies in a lot of different respects in terms of all kinds of things. This is a concept I talk about that carries out a lot. You know, putting too much into the times that we open and close bars, thanks, Jerry, is somewhat meaningless to a large. You have to take kind of multiple pictures, multiple snapshots of what you're doing. So there's a little hand-drawn chart. Can we apply it to the market recently? Oh, by the way, that's not perfect. I forgot to put the little X up there. It's not perfect. It stinks. Let's take a look at our rule, and let's take a look at it, and let's go to the QQQ. Let's go right to the market. And by the way, to find these examples, it takes me like 4 seconds. Just pull up some charts, boom, 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 here we go. That shows the trend continues into the close and then changes after the market opens. No, let me go back, because Kali made a comment that I do not agree with at all. I do not agree with at all. Now, when you say trend, though, Kali, we have to talk about what time frame we're talking about. See, you seem to be using the definition of trend as being red or green on the day, but that has nothing to do with the trend. In other words, this trend is up, period. It is up. This is the bullish part of the trend. This is the pullback of the trend. All trends have pullbacks, right? So it just so happens that we are starting a day. Right, of course. Inside of here, you're in a downtrend. If you want to come down in here, Kali, and say, well, this pullback in an uptrend is a downtrend on a smaller time frame, sure. Then that smaller time frame changes trends in the middle of the day, correct? But how would you know it's going to change trends without some guide, without some structure, without some framework. And that's what the larger time frame is here. It's that structure that says, and as a matter of fact, it's funny you mention it because here's the example right here, right? Well, that is the trend during the day, the big green line in a sense. I mean, we could talk about hourly charts, 15-minute charts, 10-minute charts, 5-minute charts, 2-minute charts, 1-minute charts, and you could be on 3 different trends any time of the day, depending upon what chart you're looking at, right? So part of what we have to do all the time is define what time frames are relevant to us for our trading. It's something that in my classes we talk a lot about. I'm not going to go down that road right now, but it's something we talk a lot about, is how you use each time frame and how much you have to look above or beneath you to make sure that you're going to have the greatest odds, in your favor. Here's a 5-minute chart of the QQQ back on 4:15. If you have your own charts up, you can take a look, follow along if you want. Here's the hourly charts on 4:15. After an hour plus of trading, this is a 5-minute chart. Hopefully you can see this up here. I did not reprint the symbol or the time frame. But if you want to, up on top of your screen, there's a couple little buttons. If you want to, you can zoom in on this, or you can make these charts fill your whole monitor. You might want to do that so you can see better. But if we're following the rule red on the day, we are red on the day big time, right? So what should the bias be? What should our bias be here today? We're coming in, it's 10:45 or so right now. It's 10:45. What should our bias be today? Now, everyone, bias, where should we be today? Short, down, short bias. And that's based on the fact that the market is red, right? Depends on other time frames. Well, obviously I'd say at the very least, Ron's saying wait, right? Because we're down a real lot. So after another 15 minutes or whatever time that is, boom, we rally back. What's the plan of action right here? I'm going to give you guys a good 30, 45 seconds to look this over and tell me the plan of action right here. By the way, that's a 20-period simple moving average. That's a 40-period simple moving average. We've rallied back to right in between that area. Rich, a small pullback for a bullish trade. And by the way, I mean, I went back, this is from the 15th, so this is a couple weeks ago because that was, the best example. This is not a trade I did or anything. This is just pointing out examples of what I'm showing you here. But, on this day, in real time, I was saying exactly what I'm saying now. So colleagues saying, okay, even if you're using the market as your bias, you look for possible shorts. Well, here's what happened. Boom, roll over, boom, recheck, and boom, fly higher. So what happened? Just a fluke thing? Bad day at the office? Failed breakdown? Well, failure is an interesting term. You can assign any time frame you want an expected pattern and say if it doesn't happen, it fails. But would you agree that there's sometimes that we would expect something to fail? I love the term failure. Who said failure? Would you agree that there's times we expect something to fail, Kenneth? Because it's not making sense, perhaps somewhere else. In other words, if time frames, if we could be right now, if we can be in a weekly uptrend and yet be in a daily sideways trend and be in an hourly downtrend, but yet be in a 15-minute uptrend and a 1-minute downtrend, all those time frames are conflicting, right? At some point when they cross, one has to win, one has to lose, right? If we're in a 5-minute downtrend, do you see what I'm saying? If we're in a 5-minute downtrend, but that's happening inside of an hourly uptrend, you follow where I am? Somewhere this has to resolve itself, right? That's part of what the art of mastering multiple time frames is all about. To me, probably the single most important thing that there is probably the single most important thing that causes failure for people in general, I think. So did this fail or not? Well, it depends what you define by fail. The 5-minute chart failed, but let's take a look at why. It's an expected failure. It's something I would expect to have happen. I'm going to put little stars there. That low right there, this is a 15-minute chart, that's the low there. And there's the low on the hourly chart. Now remember, this is an example of what I was just talking about. Remember back with the little PowerPoint slide and the green uptrend lines? Remember that? And I was talking about how you can be in an hourly uptrend, which we are. This trend on this hourly chart was one of the most impressive things I've seen in a long time. Going through April, we are in just incredibly nice. I mean, that's as nice as it gets, folks. Right? You agree? That's as nice as it gets. That's as nice as it gets. Yeah, I mean, truly, as nice as it gets. So what happens is you're in this beautiful hourly uptrend, But the morning were red. This is the morning. You see that red bar? But the morning were red. And I don't care if you want to follow, we're red on the day, there's a nasty red bar. When you're day trading, your mother chart, your parent chart is the hourly chart, and you never violate it. You're in a beautiful uptrend, you follow the prior support level, you're not shorting, period. So that low, do you follow where I am? That low there is this low here, is this low here. So if the hourly chart, who's going to win in this case? The hourly chart that has maintained a perfect uptrend, or the 5-minute chart that's in a downtrend, guys? Who's going to win? Who's going to win? The 20-year-old that's a black belt in karate, or the 12-year-old that plays video games? Yeah, I mean the hourly chart is not only the superior time frame, it's in a perfect pattern, right? So this is an expected failure, right, Kenneth? So it's one that you would actually be waiting for to use as a long. And any short play that anybody did in here, I would consider to be a major mistake, a complete lack of understanding of what you're doing. Now, again, when I say that, I use very, I use very specific terms to which there is no argument to the way I say them when I say you complete lack of understanding. I understand you may do something else, you may be playing, something, but again, if you're playing the market, if you're playing this chart, whatever it is, that is terrible trading to short that because you're fighting the higher time frame, all right? So that's an example, right? So this is an exact example. Remember, if we go back, I just want to do this for fun. Remember, we went back to here, and I was showing you that if you stop, the clock at the wrong time, that hourly chart continues to drop, but then it rallies. It rallies because of this bigger trend that's going on. It doesn't matter when we start and stop the day. You can start it whenever you want to. So we happen to start the day here when the hourly chart had rallied up to here. So it drops, and then that becomes the buy setup on the hourly chart. By the way, let's look at a similar concept the other way. Let's look at this chart down here is a different date. This is all from 4:15. Let's just go back here, and go back to 4:3. Let's take going into the third hour of this day. Are we green on the day here? I'll answer your question in just a second, Ron. Let me get through this, and I'll come back to you. Are we green on the day here? Yes. Are we in an hourly uptrend, by the way? Are we in an hourly uptrend? We sure are. So we go long. Do we go long now? Do we go long on the next 5-minute pullback? Do we go long on the next 2-minute pullback? Do we go long on the next 60-minute pullback? Do we go long a week from Thursday? What do we do about this? My rule says I'm green on the day, the market hourly chart's in an uptrend, I got to be long, right? Yeah, well, that's a pretty good answer, Steve, actually, yeah. It depends if you want to follow a rule book from Technical Analysis 101 or do you want to make money. If you would have gone long here, of course, well, the daily's right up here on the 3rd. You can look at the daily's right here. I'm sorry, the daily's not here. That's the hourly chart. So if you would have gone long, of course, you would have gotten killed. As a matter of fact, that was a short. I went back and looked just for fun. I had all shorts this day. So I'm not just gibbering, blah, 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 blah. I didn't play the market, but I mean, I had all shorts that day, all shorts. Waiting for that, when we gapped up and started to move up, just waiting for the move up and then short, 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 short. We do continue the uptrend, but remember, this is what I start talking about in terms of sweet spots and that little blurb I had up there a couple slides back. Let me go back to it. We're in no hurry tonight, right? Where's that little blurb? You're right there. The rookie says, follow the trend. I say to the rookie, well, yeah, that's nice. As a doctor, I'd say, eat an apple a day and keep the doctor away. There you go. There's another good saying. That's not really going to help you much. Follow the trend it's a goal, it's a theory. It doesn't help you make money, right? We want to follow the trend, but we only want to do it in a certain way. We want to understand the chart and understand that as a day trader, even in an uptrend, we reach levels where we're going to say, okay, the hourly chart is done. That's going to be the high area. And now we come down to a smaller time frame and pick up the smaller time frame downtrend. Does that make sense? Now, again, I'm throwing out a whole lot of garbage here in your heads, and we're not like in a real seminar class. I'm not running through this from square one and going through everything. And you may leave this more confused than you got here for some of you, but I want you to see the issues that are out there and why for some of you, and again, if you have any light bulb moments, I love the little LBs on the screen, but some of you, if you are struggling or if maybe not struggling, maybe you're just inconsistent. I think when people are having a hard time, they don't consider themselves struggling. Sometimes they do. Sometimes I get emails from people that just say, man, I'm all over the map here, Paul, help. But I think people more or less think that they understand it and they're just a little short of getting it. They keep losing money, but they always think because like they're trying to fit, like 15 eggs into a 12 carton egg container. And they keep thinking they have their hands wrapped on everything, but every time they get one thing right, something else goes wrong, and they just never really have the total understanding. I understand the bias and well, yeah, you should never have a bias other one comes from the chart, and that's why I'm huge on not listening to news, not trying to understand earnings, not trying because all that is crap. All that stuff is crap. If you listen to the news and you start interpreting what the chart's going to do based on the news, you'll just get slaughtered. Naturally, there'll be days where the market responds to what the news says in a meaningful way. And for every time there's one of those, there's 5 times that it doesn't. You think the market fell yesterday because of China trade? Does anybody think that's what's going on? It's not. Exactly, Kenneth. I mean, it's, China trade has been out there for 9 months. And I have written many times. One of these days I'll probably have an email out there that will show you if we keep dropping here that says the market is ready. We need the excuse. And I even have typed onto the letters that I write. I've put it out there that one of these days there's going to be some little thing comes out. Somebody's going to not cross the street the right way. Somebody's going to not like somebody says. Some country's going to go boo. And the market's going to drop, and it's going to be because of what happened. But it's not. The market is ready to. There's a lot of built-in profit. And we're not there yet. We started down a little bit. We're not there. But we're at that spot where I've really push the button on the short side long term, and we'll be just kind of watching that hourly chart and see what happens. But let's continue on. We still have a lot to do. There's always a saying, selling me. Okay. Yeah, we talked about that Monday night, Ron. And I don't like to overly play out sayings like that, but there is huge technical validity to statistics, and that statistic is a big one. And if it lines up with the charts, which it does, it kind of puts a little more spring in my step, I guess you could say. So where are we? So we just finished this slide, right? We have the next 2 lessons to do here. They're going to be a little quicker. I took some more time on this one because I think this one is a lesson that everybody can really understand because it permeates through everything you do. I don't care what time frame you're on, if you trade long term or short term. Just scratching the surface on what you need to know to really understand charts compared to just looking at a simple concept to say follow the trend. What does that mean, even follow the trend? What does it even mean? What trend on what time frame? And like I said, I just showed you a chart of the market in an uptrend one day, but if you went long, you would have gotten killed. Are there times? Do you know when an uptrend is in the sweet spot, and you know when an uptrend is ready to begin its pullback? Does it do you any good to go long in an uptrend if you're beginning the pullback? If you're a swing trader and you say, oh, daily chart's in an uptrend, I'm going long, and then you pull back for 3 weeks. Is that helpful to you? Or you pull back for 4 days? Is that helpful to you? That you can look back and say, well, we were in an uptrend. I'm losing money and I stopped out, but we were in an uptrend. I'm not sure what happened. Do you know when uptrends are likely to end? One of the more common things I get, and this is always tougher when I get charts after the fact, but sometimes somebody will send me a chart and they'll say, Paul, I thought I did this swing trade perfectly. What's wrong? And I'll have to get back to them. I say, no, I would never go long that swing trade. And they say, well, it's in an uptrend. I said, yes, but that uptrend was destined to fail. I could have told you that uptrend was going to fail. Matter of fact, the play would have been to short the failure of that uptrend because it was destined to fail. And naturally, after the fact, everybody's a genius. But a lot of these are charts in real time. I'm saying, no, they would never do that. And it turns out to be right because the trend is not proper. It's not just a matter of saying what a trend is. Do you even know how to properly define a trend? Do you know what's involved? And I don't mean just saying the higher highs and higher lows and all that. Sure, that's the basic structure. But do you really understand the difference between a trend that is playable and a trend that's likely not going to work at that point, right? All kinds of stuff. The theme today, if you will, is many things I have discussed fly in the face of some simple technical concepts. I mean those concepts that are one-line cliches that make the average person think trading is so easy. If you really understand the basic concepts well, you will know just enough to lose money on a regular basis. Hey, Carmen, do you guys agree with that? Never asked that directly. If you really understand these basic concepts well, you will know just enough to lose money on a regular basis. Does some of you agree with that? Yeah, but I want you to be aware of it. I know it hurts, Kenneth, but I mean, I want you to be desperately and keenly aware of that. That you have to get to a certain level of understanding to really know what you're doing. And most people, the theme that I have all the time from people that I talk to that are struggling, whatever it is not that they are wrong per se. Well, I mean, if you do the wrong trade, it's wrong, but it's not. The thought process is going in the right direction, but they're just woefully inadequate in what they know. They just don't understand enough to get everything right. I have one other slide, and I'll go on to the other two here. Oh, here's what I was just saying. I'm sorry, I should have. But it's not that they're wrong. It's that they do not know enough. They know enough to make money sometimes, but not consistently. Think about that a minute. And I really just want to take a second here to dwell on that. I mentioned this last time I was on the mic with you. You know, I had a guy that emailed me. That was really just a great email. It's really long, and I was going to show it to you. I'm not going to show it to you. But kind of the theme in the heart of the email was that when he found me again, he had been with me 2-3 months and didn't even know I taught seminars. And he was kind of like, I really respect the fact you're not pushing, you're not a salesman-like person, but if you want to help people like you are, you got to get some more people in taking seminars. And I got to agree with that a little bit. I typically don't even send out anything. I sent out an email yesterday because of that, saying, hey, here's the seminar program. Here's what it costs. How can you possibly go wrong? For the price of the seminar program, how could you possibly not get that money back? Like even just in stopping the bleeding and stopping the losing trades. How does it happen that they don't know enough but they're out trading? Well, because everybody likes to try and take the shortcut, right? I logged into a chat room the other day, not with my name, but I think it was Elite. Is that the name of it? One of the more popular ones. And it was kind of boring. I just want to kind of get a feel of what people are looking at, talking about. But I got an email from them, which was neat, and it said all the popular threads. I said, hey, this is just what I want. I just kind of want to see what are people talking about. What are the problems out there? You know what a very common thing that I saw was? Do you see this a lot? I couldn't believe how often this comment came up. I'm just struggling because the tactics I used in the market years ago don't work today. Have you seen that before or heard that, or is that something you've? I'm not really out there in the rest of the trading world. I just keep to myself. I don't, other than the people that are around DTS. Have you heard this before? What do you think of that comment? I'm struggling because the tactics I use in the market many. What do you think of that comment? And then we're going to get on to number 2, prior lows, key support areas. Pretty common. It's a general excuse. That's because most teach, wow, Jed, I'd like to turn the mic over to you. You just blew the wind out of my sails. That's exactly right. That's exactly right. You guys know what I call what I teach? And I really love the name that, I don't know, it just dawned on me one day shortly after I started up with DTS. You know what I call what I teach? I call it the language of charts for that very reason. If you learn little cookie cutter patterns, and just stops working, but and a lot of times they don't stop working, the people just stop using it the right way. But if you understand a chart, if you understand what's going on in a chart, you're never, ever out of date. There's no such thing. How did you do that with the question marks? That's pretty cool. I don't know what that means, Eric. But there's no such thing as it doesn't work today. Why? Every chart since the beginning of time is based on the same thing. It's what is every chart based on? I don't mean it is supply and demand, fear and greed. I know that. But what is it that you look at in a chart that I call the language of charts that lets you understand? There's two answers to it. Think about that a minute. Because if you really get this, that saying up there is just ridiculous. I'm struggling because the tactic, then what did you learn? Yeah, it's all human emotion, fear and greed. That's all true. I'm probably going to have a hard time getting the answer out of you because it's such a hard to ask question, sort of. It is understanding that when you're looking at a chart, you're looking at that constant battle between bulls and bears. It's like you're watching Steve, exactly. It's like you're watching a battlefield or a football game or whatever analogy you want to use, right? But if you watch a football game for half an hour, you should get a pretty good sense about who's going to win, right? If you had an aerial view of a battlefield over the course of a week or two, you should have a pretty good sense who's going to win, right? And that same battle goes on a chart. And the second part of it is you have to see that battle from a variety of different angles or pictures. which in technical analysis we call what? Taking snapshots all over, so we get the whole view, not just taking a little picture of this one little battle that's going on here by the cornfield, but taking pictures of all the battles, the whole war. What is that called? Yeah, top down, but the top down is what? Top down of what? What is top to bottom of all the time frames, right? Time frames. If you can see the battle going, understand how to tell who's winning the battle, and then look at that battle on each of the time frames that's relevant to where you trade, you have an understanding, a system, a language of charts that will never leave you. And from that, then you devise your specific little things you love to do. Make sense? Enough of this nonsense. Let's get on to the real charts and the fun stuff we're here to talk about tonight. Prior lows are key support areas. True? Always true? False? Depends a lot? If it depends, what does it depend on? We're going past 6 o'clock tonight. I really don't care. Yes, Jamie. Absolutely. Jamie, you need to have a time frame that you want to play. Like a long-term, like a laid back day traders, a 15-minute or 60-minute chart, a swing traders, a daily chart, a core traders, a weekly chart, a longer-term trader, a weekly. Once you have the time frame that you care about, Jamie, we need to understand what's going on 2 time frames above and 1 time frame below. That's all you need. You don't need every time frame in the world. We don't care about that. We need to know the relevant above and belows, and we need to know exactly what to expect, what you need or demand to see from the time frames above and the time frame below, but not all of them. Okay, does that make sense, Jamie? So is this a long? Is it a short? Is it a good long? What do we call that area to the left? Is there a name for it? Do we care to even name it? While you're looking at that, okay, good, Richard. And here's something you're going to add. We're talking about that area right there. Here's something else you probably want to see. Here's the hourly chart. This is the QQQ from 2 days ago. And here it is in the afternoon, 1 o'clock. And here's the hourly chart. Glenn's throwing out the term major support, which it technically is. Would you go along here? Thank you, Jerry. That is the 15-minute. You're quite a good eye for detail. That is the 15-minute chart, not the 60-minute chart. Instinctively said 60. I'd stay away. Is that an opinion, Ron, or do you have a rule that you could pull out of your back pocket that says, look, I can't go long. Not even possible. You say this before, you might even be sick of it, but I truly, really get a huge kick satisfaction at this point in my life here of teaching people this and get it and seeing them get it to work. And I have so many people now that's happening with. And there's a person in the room that has been a student of mine from way back. And I love when I see one of the things that person types, which is to say, I can't do that. Just period. I can't do that. Because it just clearly violates something that they have planned that they would or wouldn't do. And that's what you have to have. It's one thing to sit here and say, well, gee, it doesn't look that hot to me. But the way you trade, and again, some of you are not trading, some of you maybe this isn't the time frame, but it doesn't matter what time frame it is. You should be saying to yourself, okay, here's the only way I would play that, right? If broken, retest for a short. Okay, how far would your trade be? Oh, well, that's a good question. Well, you're looking at a 2-minute chart on the left, an hourly chart on the right. It's 1 o'clock in the afternoon. So we're talking about, well, you're talking about trying to make money. It would be a day trade we're talking about for part or the rest of the day. The issue here comes to this, and this is, this gets into a real complicated thing I'm about to say here, but it's something that you have to have. The complicated thing I'm about to say is something that you have to completely understand if you want to make money. And that's this. This thing fell straight through. And technically, this can be defined as a major support area because we had buyers. But yet, we're in a nasty downtrend. So if you're in a downtrend, prior low when you come into it is what I teach is not even considered support at all. It doesn't even justify a name. We just call it the prior low, prior pivot, whatever it is. Now, if you come down enough time frames, you find that this time frame is a major support area. But the question comes down to, do you trust or do you play a support area on a 2-minute chart when the hourly chart or 15-minute chart is simply in a downtrend at the prior pivot? What's the answer to that question? Do you trust or do you play the 2-minute chart support area when that support area does not show up in a downtrend on a bigger time frame? The answer is yes or no. I know you're not going to like my answer, but if the answer is yes or no, it's not the answer I'm looking for. It's not showing the understanding. Now, I'm going to give you the answer because there's times that I do. There's times that I will. It depends on what's going on a lot. As a matter of fact, I mean, it's even taught if you're in a dead sideways pattern, you can play the bottom, short the top. Doesn't matter. And naturally, if we're in a downtrend, I prefer to short the top. But what it comes down to is, here's the answer. Whether or not you would go to play this, the amount that you want to play that is going to vary disproportionately with the nastiness of the downtrend that's out here. In other words, you could be in a downtrend this time frame, and to the extent that you were either super extended or hitting some kind of area on this time frame, or like we saw, maybe we're, even though we're falling on this time frame, perhaps this is the support area on the daily chart or somewhere else. But whether or not you go to trust this is going to, your answer to that question is going to vary exactly reciprocally with how much you like the area that's on the bigger time frame. So there's times where you could look and say, hey, this is an interesting area. I'd play this here. And there's times where, like here, where you see this here, where this is, if you get a sense of, and this is just yesterday, right? So the market was just kind of sideways in the hourly chart. We gap down beneath the key area, and we fall beneath the prior low. There's nothing here. I mean, this is just, right? In other words, you can't get more bearish on this time frame. Does that make sense, guys? Right? You can't get more bearish on this time frame. Your max bearishness. So what's my desire to want to play a 2-minute support level? It's 0, right? That doesn't mean it's always 0. There's times where that could be a good play. And that's that balancing act that you do in trading every single minute. And that's why a lot of the nice cliche rules are great, except a lot of times rules are very hard to interpret. Because no matter how clean you try and make them, no matter how objective you try to write them, there's some subjectivity. It's always going to be involved, unless you use all mathematical guides. But even then, you're still going to be, at some point, having to make a decision as kind of a balancing act, right? There's nothing wrong with that, as long as you have the skill to make that decision plainly. What if you had just this incredible little entry that bounced, came back, confirmed, and you could have this great confirmation entry, and back to the top of the base is a 10-to-1 reward to risk? Does that influence your decision, everybody? Does that influence your decision? It's not going to change the odds of success, but would it change your decision to take the trade? The reward could you? I said, Sally, what if this bounced in here before we know it's going to fail? What if you had this entry in here, and it was really a beautiful, like maybe it bounced up a little, came back in, you had this little confirming entry, like, where you're not just buying a downtrend, but you actually reacted to this bounce, it stalled, it started to go up again, and you had like a 10-to-1 reward to risk just to get back to the prior top. Does that affect your decision? I'm not saying it would change your mind or not, but you're back to a balancing act, right? You have to throw that, don't you have to throw that into the equation, everybody? You look at this pattern and you say, okay, if we were in an uptrend, I love this, but we're in a downtrend. So now I have to do this balancing act. This chart's in a downtrend. This chart's holding support. Okay, there's a decision, but wait a minute. The reward to this could be 10-to-1. Does that weigh into the decision, everybody? A real question. Does it for you? It doesn't have to. It depends what kind of trader you are, but it certainly could. Let me give you a practical example. Oh, I have one more here. I'm sorry. We have another whole topic to do. Number 3. Minor support failure areas are great shorts. Now this one here, I think a lot of you are going to get at least some good understanding. And again, you're here listening to me. Some of you may be fairly accomplished traders. Some of you may be just scratching the ground trying to get going. Some of you may not even understand what I'm talking about. Some of you may not even agree. But I think there's a couple great concepts in here I want to get through, because again, I hear this being misused. There's a lot of stuff. There's a lot of stuff in technical analysis where we have a structure, and within that structure, you have a lot of things you can do. There's no one way to make money in the market. There's a lot of different ways, but you have to be inside of a structure and have a plan and know exactly what you're doing based on what you've learned. That's what I teach, to do it that way. But there are some things that are just wrong. I mean, there's things people do where I'll look at it and say, you know what, it's just wrong, because you're fighting the odds. Because technical analysis gives us odds, and there are certain concepts that do give us odds, and there's certain things you can do that you just have to call wrong. And this is one of those topics where people just do something wrong here. Okay, our question here is right here. I'm not focused so much at the moment about what's going on everywhere else in the chart. What I'm looking at is we have this really big explosion coming off here, and we start to bounce. And let's say that you had a short bias on this, which you very well could. As a matter of fact, I did. This is the market yesterday again. So we have this big gap down, right to there. We've erased the prior day, and let's say that you, for whatever reasons, and I'm not saying it's wrong, but let's say you have a bearish type bias in this, right? So you're saying, you know what? Okay, I didn't get the short up here, but what I want to do is when we do this buy setup, when it fails, I want to short. So that's my question to you. Comments on that. What's the validity of shorting a failed buy setup on this chart? So there it is. The buy setup. Do you see what's going on here, everybody? The green bar. We went up, we put in a big green bar, it pulled back, left a topping tail, and then red bar comes in, we go underneath the low of those last few bars in there. Some of you may use the term that is a buy setup failure, which in general can be a great way to enter short. When the long pattern fails and you want to be short, then that's the time to be short. But what do we think about this setup here specifically? And again, this is where if I don't get any light bulbs on this one, I'm going to be awfully sad. I'm going to eat dinner and sulk through it. So my question to you is, now that I've babbled forever, is when that fails, is this now, as you're looking at the chart, is this now a good short? Because we had a 15-minute buy setup fail, and I have kind of a bearish bias on the chart. Let's agree we have a bearish bias on this chart, which we should agree because it is. I have a bearish bias on this chart, and I have a 15-minute buy setup failure. And this failure is happening in what I define as a minor support area. What I mean by minor support is two things. Number one, I could have put a smaller time frame in, but I didn't want to start. You see these bottoming tails and topping tails? This actually created kind of a sideways little base here on a smaller time frame right through there. And also it's sitting on top of this area from over here, which is still a relevant area. So all that's what I call minor support. It's like a prior resistance area that was overcome. So we rally up. We go up and down, up and down, up and down, and finally we break through that. And it's also the stall point from this unfilled gap here. Yes, with the stop just above this. Must consider the tails in the second, third candles, downside correction. It's a good point. Well, like I said, those tails both up and down end up forming kind of a wide sloppy base on a 5-minute, 2-minute chart is what it turns into. So here's the thing. If we want to, let me just go right to the whiteboard here. Again, this is kind of an advanced talk, and and sometimes I'm a little hesitant to go too far down a road because you get the wrong idea, you use this wrong. But if we bend in an uptrend view and we go flying up into some area, and this area is a resistance area, right? Be a very legitimate concept to look when we get to the area we want to short, to look at the smaller time frame buy setup failing. Bing, 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 is our entry short. That can be a great idea. But there's a time that will not work for you very much. And that is when you're trying to short that into a minor support level. Minor support levels are not good short areas. You really have to have a good understanding about what minor support is. And by the way, when you look to the left and you see something, how do you even define it, everybody? The prior pivot high from 2 hours ago, from yesterday, from 3 weeks ago, from 4 years ago. Does it matter how old it is? Does it matter what type of support it is? Minor, major, one prior pivot, failure pattern, gap? Does it matter what it is? See, all these things come into figuring what support it is. And again, from the cookie cutter world, we just like to tag a name onto it and say, well, let it be. But that's not really true, isn't it? Doesn't every support or resistance area have a different weight, everybody? Isn't that true? Yes, no? Isn't it true that every support or resistance area you come into is unique, like a fingerprint? It has its own characteristics, and they have to be evaluated. How many of you know how to evaluate support and resistance? Experience, very few people do. It's one of the most important things you can learn and understand. This is a minor support area. If you wanted to be short here, this is such a big thing to me, I oftentimes will ignore the bigger time frame bias, even though the smaller time frame is saying that. And a common example where this comes up for me is when you have like a gap down on something, and it's a bearish gap down and you want to short it, but the move up intraday forms minor support levels all the way through. And you get into, let's say, a 15-minute sell setup. There's many times I'll look back at the 2-minute chart and say, I'm not going to short that. Even though the big time frame is saying lower. If it's based on a gap, there's limited confidence in the bigger time frame. And I will see, one of the things I teach is you come down one time frame as well, below the time frame you're playing, and you look for clues. And when you have a certain pattern on the way up, I won't short into it. Does that make sense? So this is a good example, and I was in the room. Some of you in the room with me, right? We were talking about this day, right? Remember this, everybody? Some of you guys were in the room. This is just yesterday, and I would not play this like short. I was saying that this is expected, that you're going to jiggle around and that area should hold. See, the thing is, when you have like prior lows and you fail to bounce and you break lower, we call that support failing. Does everybody agree with that? The support area failed, right? Is what we call a major support area, right? By the way, is major support, is that real support? Is it self-fulfilling prophecy support? Or is it support where we know there's going to be a buyer there for sure? I'm giving you 3 choices there. Real plus we know there's buyers there, or self-fulfilling prophecy, which means there's not really support there, but people may think there is because when you look like a moving average or something like that, that's called self-fulfilling. When you look at Gann lines and Fibonacci lines all in a vacuum, those are all self-fulfilling prophecy. Somebody says, well, I'm going to draw a line on the chart and that's where the prices should bounce, but they don't necessarily. Yeah, see, minor support, you always have real buyers. It's not only real support, but you're guaranteed to have buyers here. See, major support, you're not guaranteed to have buyers there. What it is evidence you had a buyer there in the past, right? Major support is evidence that you've had buyers there in the past. But if that buyer leaves, guess what you have? You no longer have a support area. Does that make sense? Therefore, a major support area like this can break. Does that make sense, everybody? It can break. So everybody's buying, and all of a sudden, boom. And this is going to also be the trigger area for stops, right? Everybody who's long, and don't think this isn't a big deal, everybody who's long is going to have a stop there. And when we hit that area and there's no buyer there anymore, guess what? All the stops are going to run, and that area will fail, and we call that a failure. Is that true with minor support? Is there an area in minor support where people get in trouble? In other words, is there some number, some line where everybody's buying and all of a sudden, boom. See, minor support is almost the flip-flop of this. Minor support, there's guaranteed to be buyers there because of the fact that when we broke through whatever resistance level there was, the sellers that were there, the shorts, are on the wrong side of the trade, and they have to buy to get back out of the trade at some point. So when you have minor support, it runs all through this area, There is, and that's why you think of minor, and for my students, don't confuse this, but minor support is like a big mattress. If you touch the top of the mattress and you go into it a half an inch, the mattress doesn't collapse. As a matter of fact, the more you go into the mattress, the more buyers you have. Does that make sense, everyone? So minor support can never break. I've heard people say we broke the minor support level. You really can't. And that's why I'll never try to short this pattern. For me, this would have to just be a whole separate strategy. I'd have to fall, way through every possible conceivable level. I'd have to burn a hole through the mattress and then look to start shorting. And that's one rule that I tell you will save you so much money it's hard to even believe. I can just show you so many examples where you try to short into a minor support level and it's not going to work. Now, there's an exception. It's when the time frame above you is so big, so strong, so powerful, so perfect, and such a great resistance area, you don't care what's beneath you, but you have to make that decision. Does that make sense, everyone? Close of the red bar should be considered. Well, the bottom of a red bar is never a short entry because there's no support there whatsoever you're violating. The close of a red bar is, the next bar, any bar in and of itself is fairly meaningless. Any bar is formed because all of a sudden the clock strikes 12, we start a new bar, and boom, there you are. You go a penny lower, you're under the red bar. It doesn't mean anything at all. It's meaningless, right? Does that make sense, everyone? And that last one's really out there as a topic. And again, it's something that I think requires, and this is what the market did yesterday. It checked lower and then boom, took off. Now, do you know you're going higher for sure? No. Do you play long blindly because there's minor support? No, the upper time frame didn't agree. But you know what it did do? It kept me from wanting to be short aggressively right there. Oh, I got one more here. I thought I'm done. I got one more little kind of tie it all together here slide. This is LEN from yesterday. Is this, guys, this stuff good? Where are you bored, learning, excited, thrilled? And these are some random concepts. These are random concepts. And again, the point from my point of view is this. Naturally, this is not a technical analysis class. We're not going from point A to point B. What I just want to show you is, the language of charts, how much there is to learn in each of these categories. Right here is LEN yesterday. I told you I was going to run over tonight because I just decided I didn't care. Here's LEN yesterday. The question is going to be right there. We break a very clean defined support level. We have a low here, we have a low here. That bar holds the low, bounces a little bit, and then we break through. Is that a short? Yes, it can be. Yes, I like it. Could be, but I don't like it. No, never. And one question you're going to want to know is, and I'm already way ahead of you, you're going to say, what does the other time frames look like? The other time frame is by definition, I'll tell you, bearish. Here's the hourly chart. It's bearish. We're in an hourly downtrend at this point. And we're talking about right in here. Want to see the daily chart? Daily chart had gapped down. And even though it had been an uptrend, that uptrend is actually challenged or almost beginning a downtrend because we already have this gap down, a lower high, gap down again. So there's enough bearishness on the daily chart. The hourly chart's in a downtrend. The question is, do we want to short below that major support level? Expanding the range is some interesting, good language. We have yes and no's, but let's go beyond that a little bit. We have a week daily chart, check. We have an hourly downtrend, check. We have a pretty clean support level that's held twice, and now we clearly have broken below it. I mean, in terms of visually, numbers, whatever else. If we don't like it, is there anything that you would change to say, yeah, I would short that? Would you ever short that? Is this something that you would do in the right circumstances, would never ever do? Just don't like the way this one's set up? I agree that generally speaking, the daily still in an uptrend is a problem. The daily, the 20 doesn't really matter to me. The daily chart's pretty messed up there. My problem is, the issue to me is not even going to be that I just threw the daily on there to let you know we're not like on some big support level or anything. Let's just all agree the daily's not a problem to shorting this, even if you think it is. That's not the issue I want to do. And this is really, really important to me too. I'm going to make a comment to you that some of you may not like a whole lot because it may sound kind of scary, but no matter how good you get at technical analysis is not always right. It's about probabilities. I think more than a lot of people realize, it's about common sense, math, and probabilities that you have to take and overlay technical analysis. All right? To me, that trade there is never, ever, ever okay. Never. Never. There is no circumstance, no higher time frame, no market relative concept that is ever an okay trade. Never. Never. To me, it's what I call the second biggest mistake traders make, period. It is shorting a multiple bar drop that appears to be breaking support. This didn't break support. Why did it not break support? See, and here again is there, we talk about, I'm going to wait for an answer to you from that. Why do I say that did not break support, where some of you may say clearly it did? But this is one of the things that I talk about, back to the first conversation today, is how do you define these things? A rookie trader would say, we broke support. Look, I can draw my mouse here, and I can find that number. I can find the number. We went way below it, Paul. It wasn't a penny. We went below that. But how do you define a break of support? Okay, it's an area. That's true. But what would have to happen for you to say we even broke it? Closing bar, I'm sorry, but if you're saying the word closing bar, that's just poor language to even use. It doesn't, and I'm no offense, most people appreciate when I'm just forthright, but if you're saying closing bar to me, it's irrelevant. What if we had, this is a 5-minute chart. What if this is a 4-minute chart? What if this is a 4-minute chart? It would have closed already. Would that be okay with you then? Opening bars, closing bars, irrelevant concept. It's all just a clock. You know, why guys, could you trade with a 4-minute chart instead of a 5-minute chart? Yes or no? Yeah, it wouldn't matter at all. I wouldn't even care. You can pull out a 3-minute chart, a 7-minute, 8. What I care about is that you take that snapshot from a variety of angles. It doesn't really matter if you want to use a 5, 15, 30, if you want to use a 3, 13, 27. I don't care what you use. You can use 1600 ticks. That's fine too. Just so that you're also using 7,000 ticks and 35,000 ticks, or whatever other time frames are relevant to you. But you got to get that picture from a variety of views. The reason that there is no break of support is because the bulls never ever stepped up to the plate. The bulls never failed here. Does that make sense? The bulls never failed. They failed over here and over here, but that was years ago, days ago, minutes ago. It doesn't matter. I don't care about what happened in the past. It's just an area. What I care about is the reaction to that area. I need to see the bulls step up and see them battle. Remember I talked to you? I said this whole concept is understanding the battle between bulls and bears in every aspect of the chart. I cannot declare the bears a victor until the bulls get out of the chair and fight. Does that make sense? Light bulb, yay. Now when the bulls stand up and say, okay, putting my boxing gloves on, I'm coming out full bore, I'm going at you. Then if the bears trounce them after the bulls try to win, then the bears have won. Until that point, we don't know what's going to happen. Why did I pick this chart? Because I shorted this chart yesterday. Guess where I shorted it? I shorted it right there. No, if I did, I wouldn't be. If I shorted the chart right there, number one, no, I didn't go long it either. If I shorted it right there, number one, I probably wouldn't be showing it to you, even though I'm pretty honest with my mistakes. But it'd probably be because I wouldn't be able to see, because I would have taken a number 2 pencil and shoved it into my cornea, so I wouldn't be able to see today. But where I shorted it was right up here, right there. This was right, people in the room yesterday. This was the afternoon short at 51.74, about 5 cents off that high, right there. My stop wasn't 5 cents there. Exactly, Glenn. Exactly. So I entered there and I got out there. You know, Richard, you can buy a new monitor though. You just buy new monitors. You start sticking pencils in your eye socket, you really learn something from it. So what you have to have is the knowledge to know what you're looking for, and then the patience to wait for it. I watched this for a long time, right? This LEN was on the screen all day for me. And I waited until we got to there. Until today, I waited until we hit the high of the day to short it. Could have done it a lot earlier. That's true, Eric. Well, then you also have the eardrum popping. You know, eardrum popping is very effective too to deter you from making mistakes in the future. So take a look at this chart. You know, grab a picture of this, and to me, this is all there is. If you ever short something like down here, I mean, you're not in the game. It's getting everything pulled together. This was on my list for a whole lot of reasons. The daily chart was breaking, hourly chart in the downtrend. And again, this may have never come into play. It could have been that when I was waiting for it to rally up to here, it could have just stopped short and fallen. And that's why I have a dozen, 20 different things on the screen that I'm looking at. Something's usually going to fall into place. And you have to wait for it. But to wait for it, you have to have the patience. And to have the patience, you have to have the confidence and knowledge of what your patterns are and exactly what you're doing. Make sense? Any questions, anybody? I told you I was going to run over tonight because I had too much material in here. For those of you who are kicking the tires, as you know, I supply a lot of free information on the site, DTS free stuff, prior events are out there, Trade of the Week videos, educational videos. I'm continuing to add to it all the time. And for those of you who are ready, I have to say, if you are ready and you're trying to trade, I think it's almost foolish to not spend the $3,000 for a program that will last you the rest of, well, a long time. So if you have any questions, let me know. For those of you that are kicking the tires and checking things out, check out the free stuff page and all the good stuff if you haven't done that already. I have time for one. No, go ahead, Sally. What do you got? Sally asks, and those of you that are still hanging around here, Sally asks, if you're not good at making decisions, can you be a good trader? Yes or no? A day trader, Sally, or a swing trader? It doesn't really matter, but just so I can answer your question. Yeah, there's a good group here, Sally. They have the answer for you. Sally, listen to this. What I talk about as a day trader is during the day, you should not be making any decisions at all, hardly. Certainly when it comes to management, when you're managing a position, you should be making 0 decisions. They're all made for you ahead of time. You already know how to manage something 100%. There is no decision-making process that comes into it. Now, theoretically, that's true for any position you take. It's a little harder, though, because no matter how well you define something, there's always a little bit of a judgment call. But the point is that your goal, Sally, as a trader is to learn what you're doing, zoom down and specify exactly what you want to do as a trader. People in the room know, I mean, I have my favorite thing I do. I almost feel like I'm getting a little boring because 4 out of 5 things that I do is the same thing. But you then need to define exactly what you need to see, define that picture you need to see to trade. And then you don't have to make decisions during the trading day. All you have to do is just kind of say, well, here's that picture I'm looking for. What's my entry criteria? Well, my entry criteria is a failed bottoming tail on the 1-minute chart. I'm shorting into 60-minute resistance. I'm in the area, check mark. 60-minute resistance is here, check mark. It's 10 o'clock reversal time, check mark. 1-minute buy setup failure. Throw my stop up twice the distance from the prior high. Have the alternate to bring the stop down to a 50% risk level anytime I want to, check mark, done. What you need to do is learn what you're doing so you have the confidence to be able to execute what you want to do during the day. That's what people don't have. They don't have the confidence level or the knowledge to be certain enough, and then that leads to indecision during the trading day. They never know what to do. Was that a good answer? That was a darn good answer. You guys supplied most of the answer there. Would you say a good place to exit a trade is no, Dale, not at all. Well, naturally, that is a good spot, but there is a difference in standards between what you need to enter one trade and exit another. You know what I used to call? You're bringing up. You know what I used to call that rule, Dale? The O.J. Simpson rule. Why is it the O.J. Simpson rule? We used to, I don't use it as much anymore, but over the years, I had a name for like everything. Every little thing we had a name for. There's the Moon Unit Zappa play. There's the I still talk about the Gene Hackman play. Gene Hackman's a great play. They're kind of funny. They're not, I don't mean to present them as cookie cutter. They're not even strategies. They're just concepts. But why O.J. Simpson? Yeah, Tony Orlando. Yeah, I still use that one once in a while. I'll talk about that too, eh? Thanks, Mike. The reason is because not changes direction. Okay. Well, because O.J. Simpson was innocent in the criminal trial, but he was guilty in the civil trial because there's a different standard, right? So he's guilty in one, innocent in the other, and it's the same thing. Your criteria to enter, Dale, should be the highest criteria. I talk about when I'm scanning, I only pick up about 3% of the stocks I ever look at, even make it on the screen. And of those, only a small percentage get the call. The criteria to enter something is precise. It's like hanging a man. You have to be absolutely certain. You want to get out of something, there comes a spot. In other words, if I'm exiting a short, it doesn't mean I'm going long. Matter of fact, it's almost impossible for me to do that. Because I look at higher time frames as being my guide, it would be virtually impossible for me to flip a trade. I've done it probably twice the whole year. I did it a couple months ago and I made a big deal out of it. It would have to be a rare, unique situation, usually on a gap or something like that. Does that make sense? So your criteria are totally different. Exiting criteria is a little softer. You know, you get to a certain profit level, certain chart pattern happens, and you want to take profits. It doesn't mean I want to go long. You may even acknowledge, hey, it's probably going lower, but you know what? I'm done. I would add never chase. I agree, never chase a trade too as well. I don't, but an expression I have a little bit of trouble with sometimes is that the expression is it's missed money is better than lost money. It's true. You never chase a trade. That's always true. But just chickening out and not hitting the button on an appropriate trade is not acceptable. That's as bad as stopping out. As a matter of fact, I get much more upset about missing a trade I should be in than stopping out of a trade. When you're new, that saying carries a lot of weight because most of your trades are not good. But when you get better and you have the trade that you're using that's going to make your money for the day, your money for the week, you don't just pass that. You don't just skip it because you don't feel like doing it because you're not sure about it. If it's the right trade, you get in. You don't hesitate. And that's where when you lose confidence sometimes, that's where you goof up because you no longer have the confidence to do what you're supposed to do when you're supposed to do it. Chase a trade means is that you enter the trade beyond the entry you should have gotten it. You're supposed to go in at 22.25. You hesitate. You're not sure. You want to see more people get in the trade because if they're getting in, it must be a good trade. And then you wait until it's 15 cents past, and then you get in. And that's well, if you look at my video of prior events, I talk about that in one of the videos. It's a video that has one of the subtopics as the entry is everything. I forgot which one it is, but I talk about that whole concept. It's really a big deal because it has really a three-prong effect that goes beyond just risk-reward. It goes into the fact that it often screws up your whole trade because of the way you end up managing it. But it's a big deal. Anything else? All right. Got any questions? Feel free to email.